Good evening. Thanks so much for tuning in. You're watching News Now on ET Now. My name is Alex Matthew. I'm joined right on the top of the show by Alok Misra, who's the Chief Executive Officer and Director of Microfinance Institutions Network. Thank you so much, Mr. Misra, for joining in. Also joined in by Maithili Busnurmat, who is the Consulting Editor at ET Now. And we're going to be talking to both of them very shortly about what was announced just a short while back. The Finance Minister holding a press conference to announce 8 measures to bolster the Indian economy after the bruising that it took after the second wave of the pandemic. Finance Minister Sitharaman announced a loan guarantee scheme among those announcements that were made worth 1.1 lakh crore rupees for 3 years, a scheme to facilitate loans to 25 lakh borrowers, over 23,000 crore rupees allocated for public health infrastructure. There was also an announcement on a free tourist visas to 5 lakh tourists to revive tourism, and several other measures including continuation of a free food program till November and an extension of the Atmanirbhar Bharat Rozgar Yojana. I'm going to first hand it over to Maithili. Maithili, good evening to you. And some of the announcements that were made, perhaps updates on announcements that have already been made. What do you make of the entire list of what the Finance Minister spoke about, though?
That's exactly it. You put your finger on the pulse, because the big problem really is it was nothing really very dramatic. It was not the kind of big bang stimulus package that one was really expecting for. It was people were hoping for. In fact, the Economic Times reported that CEOs of large corporates was all demanding that government go in for a big stimulus, because remind you, we're talking about an economy that contracted 7.3% last year and has also suffered a devastating second wave since the end of the last fiscal. So given all that, I think there were hopes that the government would announce something much larger, instead of which what we have seen is really more of the same. Essentially, credit guarantees. That means you're pushing the banks to lend more and more on the premise that these will be guaranteed loans. Of course, it's a different matter that one doesn't know what will happen to these loans later, because if the impact on the economy is as it is feared, most of these will end up NPAs. But for the moment, the additional expenditure from the government is very minimal. Even though the my finance minister said that the total cost is about 6.29 lakh crores, the actual additionality in terms of expenditure is perhaps less than 1 lakh crore. And that's not the kind of support that one was hoping for from a government which otherwise has been fairly fiscally prudent by reallocating its expenses, by cutting down on unnecessary expenditure. You could perhaps have redirected it more to give stimulus to the economy. That has not happened. So many of the measures really were, as I said, guarantee schemes. Others were continuation, as in terms of the free food till November, repetition of what was said, announced earlier. Similarly, power reforms. So overall, I would think nothing that is really going to kickstart the economy as for a big stimulus. The only hope one can say is that perhaps the government has reason, I hope it has, to be more optimistic than markets in general, though of course today we saw the markets also were not so optimistic. There was, the Sensex did fall, and apart from that, almost every other economist, brokerage house has lowered the estimate of GDP for this year from the government's estimate of 10.5. So overall, I would say rather disappointing. One was hoping that the government could do more. The only hope, as I said, is that perhaps the government has secret information that you and I don't, that actually the economy is in better shape than what everybody else seems to think it is.
There is another possibility, and I want to come back to you on that in just a bit, Maithili, but I want to go to Mr. Misra as well. Mr. Misra, some specific announcements for smaller borrowers, perhaps to head off what could be, as Maithili was pointing out, stress in the system. What do you make of the announcements that were made for the MFI space in particular?
Thanks, Alex. I think the announcement, particularly, I will not go into the broad brush of the announcement, but I would keep it to the sector which I represent, that is the microfinance sector. And I would say that the announcement made today regarding the partial credit guarantee scheme by the finance minister is very welcome. The sector was looking for it, and I would just run you through the important parts of it. Because the microfinance industry, in which there are NBFC MFIs and MFIs which are operating as Section 8 companies and even as NGOs, but primarily what was happening was that whatever liquidity measures have been announced, by the Reserve Bank of India through TLTRO and then through Special Liquidity Fund Facility through RBI and SIDBI, through NABARD and SIDBI. Most of the funds had flown to the, the larger players, and the smaller and medium MFIs were sort of liquidity. And even the last year's PCGC scheme, if you see, when it was announced, it was said that it would guarantee the commercial papers and NCDs to be issued. And generally, typically, the small and medium players don't issue CPs and NCDs. They don't have the wherewithal. They won't be able to get that rating. So we had represented to the government that these institutions play a very vital role in including the low-income clients in the financial inclusion piece of the country, and they need to be supported. And we had requested that maybe, because the bankers might be a little risk-averse at this point of time, if the guarantee is provided from the government side on the term loans which are provided, wholesale term loans, wholesale debt funds to these MFIs, that will provide comfort and liquidity will start flowing in to small and medium MFIs. And I'm very, very happy that the government has agreed to it. And in this today's announcement, the Finance Minister has said that whatever loans which will be provided by scheduled commercial banks to new or existing NBFC MFIs or MFIs for the lending to the low-income clients or the typical microfinance customers, which will be guaranteed for a period of 3%. And not only that, she has said that these interest rates on this term loan facility from this bank would be capped at MCLR plus 2%. And seeing the current MCLR, I think it would be somewhere around 9 to 9.2%. That would be there. So that is a very welcome step. And the 7,500 crore has been allocated with the guarantee amount, and I think that more than sufficiently takes care of the liquidity requirements of small and medium MFIs. And as you know, the Finance Minister has also said that it will benefit 20 lakh microfinance clients, and that figure comes out by, if you divide 7,500 crores by average microfinance loan of 30,000, it comes to roughly 25 lakh clients. So I feel it is a very great step because not only CPs and NCDs, unlike previous PCGC, but now term loans from banks also are covered under that, and that will give a lot of fillip to the liquidity flow to the microfinance institutions, especially the small and medium ones. I welcome it wholeheartedly.
Mr. Misra, one small follow-up before I go back to Maithili. Just so liquidity is one factor, of course, but stress in the system is quite another. In terms of loans that have already been dispersed, what do you have as an update? And you mentioned a few of the smaller players are also finding a problem in terms of access to capital. But what about collections? What has the impact been post the second wave of the pandemic? You should be having a clearer impact right now because you've had a bit of a lead time to understand that.
Well, I will give you you should look into the past data trends. And if I see the past data trends of the COVID-1 wave, which was last year, and the lockdown and moratoriums and all that, and the normal activity resumed, I would say, semi-normal in October, and then by December we were almost normal levels of activity in the ground. And when I say normal activity, it means the institutions were able to operate, they were able to go to the client center meetings were held, albeit with COVID protocol. And in March data, if you see, the sector had come back to a recovery percentage, all India percentage of 90% plus. Normally our recovery rates are 98%, it had already reached 90% plus, with some states like Karnataka going to 96 and all that. So we are pretty almost reaching normalcy, and then the COVID second wave has hit. On the COVID second wave, when you say that we had the lead time to assess the impact, I don't think so, because in many states still the lockdown is continuing, and it is difficult to, when the repayment dips, at present we are finding it difficult to assess that whether it is due to the inability of the institutions to reach the client, because clients are not able, our clients are not under ECS mandate or something where they can pay digitally, or it is due to livelihood stress. But yes, definitely livelihood stress is there, but with RBI's resolution framework and all that, I think the way lockdowns are lifting, by end of July, I think we will have a fairer sense of that what is the level of stress. But I don't think it is far greater than COVID-1 in case of microfinance. And there is a reason to it.
Understood. Thank you so much, Mr. Misra, for taking the time. Maithili, I want to come back to you, and you were mentioning prudence, and you were mentioning the possibility that the government knows something that we don't. There has been quite a bit of prudence since the onset of COVID-19 in the way that measures have been announced by this government. Could it be that they are being cautious ahead of a possible third wave of COVID-19 where restrictions will once again have to be imposed, and they're just in wait and watch mode perhaps for another month or so?
Alex, all the more reason, in fact, to spend now, because once the crisis hits you, then if you start spending, it might be a bit too late. So the economy actually needed support yesterday, not today. Unfortunately, even last year, the government dilly-dallied. It was essentially the Reserve Bank of India which really stepped up and did, supported the economy, maybe excessively, because now we're seeing the surplus of liquidity spilling over into inflation. Whereas the government somehow was very reluctant, reticent, whatever you want to call it, whether it was fear of, that fiscal deficit, fiscal discipline, all that, which is a little overdone, because when you have a once in a century crisis, that is not the time to worry about fiscal deficit. Now, this is something that economists have said over and over again, including people who are very ultra cautious, like the former RBI governor, Dr. Rangarajan. But somehow the government doesn't seem to get it quite that way, because they're still very cautious about spending. And if you're worried about a third wave, this is the time when you really need to spend, because you already have so many people who have been rendered jobless. If you don't spend now, then when is the question? So I can only hope that, as I said, the government perhaps feels the economy is in less need of support than people like you and I or economists seem to suggest, which is why they're holding back. Because frankly, I do not see any reason, because across the world you see that increasingly it is a fisc which has stepped up, and monetary authorities are now taking a backseat in many emerging markets, where in fact the monetary authority, the central banks have started reversing their easy money policy. Whereas in India, we see the Reserve Bank continuing with its easy money policy and government continuing to be very parsimonious in spending. That is something which must get reversed. You must see government lead and RBI follow. But for whatever reason, that's not happening. So I think that is why one is a little apprehensive that you are not going to see the kind of revival that one was hoping for. That V-shaped recovery is increasingly looking more and more like K, which is very dangerous in a poor democracy.
Absolutely. Thank you so much, Maithili, for taking the time, and also Mr. Misra for putting things in context as far as the MFI space is concerned. We'll have to watch those high-frequency indicators with an eagle's eye to see if there is some sort of an indication as to what Maithili is pointing out. Let's take a look at some of the measures that the Finance Minister announced, and here's a small slice of what she said.